Testing, testing, and we are live. This is Travis Witherspoon from Carter Cow Trading. Trade with Travis with you on YouTube. Hope everybody's doing very well on this Thursday morning. I look outside and it's raining. Um, every time that I try to get started right at 7 o'clock, my oldest always comes down and does something, and it stops me from being able to get like literally started right on time. But we're here. Let's go ahead and get started. We'll go ahead and move on from there. So, not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. I understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money, so please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. So here we go. What's going on, everybody? I hope everybody's doing very well. I can see myself on YouTube, so everybody on YouTube, hopefully you're doing very well. Drop in your comments, drop in the pairs that you want to be able to take a look at today. If you have any questions or anything else like that, you can be able to do it. Also, while you're doing that, please make sure that you subscribe. Trying to get over that 100 number. Been stuck at 40 for a while. Really trying to be able to push everything up. Hopefully, we can be able to make this another revenue stream going into 2021 and being able to get that stuff done. Hopefully, I inspire people to be able to get started when it comes down to Forex trading. And speaking of being able to get started and being inspired of being able to get started in the Forex trading, what I'm going to do is drop in a link inside of every excuse me, inside of every chat, which is our 5-day Forex bootcamp. If you're interested in being able to learn a little bit more about Forex trading, have not traded before, interested in being able to get started with that, want to dip your toe in the water when it comes down to Forex trading, please make sure that you end up going to our monthly bootcamp. It's from November 23rd to November 27th. We're going to start at 9 p.m., go to 10 p.m. each and every day. You're going to end up receiving you're going to end up getting started with your overall demo account. We're going to teach you some overall strategy, something that you can be able to use on your phone, something that I use each and every day to be able to scout the market. You're going to learn how to be able to trade with other people's money. You're going to end up learning Forex in general and how to be able to find direction, how to be able to place entries, how to be able to place exits, how to be able to go for low risk to high reward type of situations and keep yourself out of bad situations when it comes down to the market. I think this is an excellent way to be able to get started when it comes down to overall trading. And I wish everybody does take that opportunity to be able to get started. We've had a lot of students come through our boot camp, and we had a lot of students basically be profitable after leaving our boot camp and being able to go through there and actually having a chance to be able to hop inside of our masterclass. So very interested in being able to invite each and every person to this as well for this month. We are going to do it on Thanksgiving night. It's going to be from 9 p.m. to 10 p.m. Obviously, I want to make sure that everybody knows that. But on that Thursday, we're going to end up talking about how to be able to trade with other people's money. And I think that's probably one of the best things that you can be able to learn how to do and be able to get a return on investment that you can be able to make. So something to be able to pay attention to, something I definitely hop into. Speaking of being able to make an investment on yourself and everything else like that, I literally woke up to being able to see $200 in my pocket. Now, for me, honestly, that's not new. I use EAs or expert advisors when I end up trading, and my goal is to be fully automated before the end of the year on some of my accounts, which means that while I'm actually sleeping, my computer systems are actually working for me to be able to generate passive income. If that's something that you're interested in being able to learn, that's something that we talk about when it comes down to Believe in Yourself Bootcamp. So please make sure that you end up hopping into that and being able to go from there. So here we go. Let's talk about what's happening with the global economy and go through our trade mechanics. So yesterday we end up having President Lagarde ended up speaking, went through everything else like that. We've seen that the Eurozone basically ended up having a slight little push to the upside, then it kept on moving to the downside, especially on pairs like the Euro, New Zealand dollar, and a few other pairs. Consumer inflation actually ended up coming out for Australia. That was at 3.5. That was actually better than expected overall, and being able to go from there. Jeremy, what's going on, man? Hopefully everything's going well with you. Haven't spoken to you in a while. Hit me up in the comments. We looked and see what's happening earlier today. We ended up talking about how today was going to end up being a fundamentals day yesterday. We ended up seeing that the GDP actually ended up coming out a little bit earlier and actually was negative when it came down to the pound. So we should see a little bit of weakness from the pounds. Now, the problem is that the best time to be able to see that was at 2 a.m. in the morning. Now, we can see that probably the market has probably made a move to the downside, and we're probably looking at the retracement of that move. Now we need to look at being able to get in a little bit later on for the overall pair. But I will take a look at that, obviously, when we go through our overall pairs in general. A little bit later on today, we're going to end up seeing a consumer price index on food and energy for the U.S. dollar, and we're going to end up seeing consumer price index for year over year and month over month between that. We have to be able to pay attention to that. That's going to come out at 8:30. And also, Chair Powell is going to end up speaking, and he's going to end up speaking about the economy. Now, remember, when he talks, the market listens. When the market listens, the market moves. And we just have to pay attention to what's going on. That might end up affecting pairs like gold. That may end up affecting pairs like the pound United States dollar. So we have to take a look at that overall. Then after that, Governor Bailey's going to end up speaking at 11:45. And President Lagarde is going to end up speaking at 11:45 respectively as well. So with that being said, let's go ahead and take a look at the charts and let's see where we're at. I want to start off with the currency strength meter. I want to see what's actually happening from that. I want to see if the pound actually was down. Yep. There we go. We see that the pound is in extreme weakness. We see that the Eurozone is in extreme strength. We see that the Swiss franc is in extreme strength. Now, I think half of that is because of what's happening. Half of that is because the market opens at 2 o'clock for them, and that's when they end up having the biggest moves. But we can also see that the Japanese yen ends up getting stronger. So the pound overall is weak. Maybe we might find some scalping opportunity, but I think probably most of the opportunity is gone already. Taking a look at the U.S. dollar and getting into that. Starting off with the weekly. Remember, the reason why we look at the U.S. dollar and the reason why we go through our trade mechanics is because we want to see what's happening with these overall pairs and kind of get an idea about what's happening overall. Remember, what we look at from the U.S. dollar, we kind of correlate that to U.S. based pairs, and from there we can be able to get an idea about what's happening. All right, now looking at this market was in consolidation. Then after that, it broke to the downside. This market currently on the weekly is in a R1 position, meaning that the market is getting into a position so we should be looking at being able to buy long term, but right now it has not moved and gave us a potential U-turn area. It broke out of a counter trend line break a few weeks ago, fell into consolidation and broke below it. Now remember, when you have a breakout, you always have a retest, and currently right now we're in that retest phase going on to this week. Now, what Chairman Powell may end up saying this week may end up pushing it back inside of this consolidation area, or could basically end up making the market continue to reject, in which that's what we actually want to happen right now if you're looking at trading pairs like gold and a few other things like that. Obviously, the sweet spot area to be able to get to any trade when it comes down to this overall market is right around where we are, but we would love to be able to catch it a little bit lower for this overall spot. But this is basically the sweet spot area on being able to trade inside of this U.S. dollar index over the course of the next few weeks and months respectively. But the one thing that I do notice is that this market was in a buy zone. It's basically leaving the sell zone, and we expect for the market to go down to the buy zone. So I still do expect that the market is going to be a little bit weaker, and as long as it keeps on falling down to this area, I won't want to buy it when the market is in a buy zone long term. So overall, I still expect that the market is going to end up being weak for the U.S. dollar. We have to see what happens today, obviously. Going into Going into this overall consolidation, we can see exactly what's happening. The market was in consolidation. Then after that, it basically ended up breaking out of it. Currently, right now, we're actually in the thick of it. We're basically touching the overall past support, turning into future resistance. Now, because the market is in the buy zone on this overall pair, the one thing that I would end up paying attention to is, remember, we're probably looking at about 7 to 11 days of bullish movement. The question is this market going to end up remaining to be above excuse me. I probably need some water. Okay. What we're asking ourselves is this market going to continue to be below 12,000? If it remains to be below 12,000, then the market is going to end up considering to be bearish. If it is bearish, pairs like Bitcoin, pairs like gold, pairs like silver, pairs that are going against the U.S. dollar are going to remain to be strong over the course of the next few weeks, especially if it ends up breaking below 11,000, basically 11,919, which is the lowest low. So overall, I see that the market is in the buy zone on this overall pair. We see that the market is leaving the sell zone on the weekly. It's not aligned for an overall trade for US based pairs, and that's the reason why we haven't really kind of talked about them in general. But overall, if this market keeps on breaking to the downside, we should expect that that market is going to end up falling. Henry, thanks for the like. I do appreciate that. All right, so overall, market is considered to be bearish. So let's take a look at oil. Oil has been a thorn on my side, and I'm looking to be able to sell it, but every time that we do sell it, we sell it at a position to where the market is putting us in a bad position. So this is where we're at right now, and it's basically playing with us again. And this is an area that we're looking to be able to sell it one more time. So let's go through and let's talk about why I'm interested in possibly end up selling it one more time and taking another chance on it. From the weekly perspective, what we're looking at is this. Jay, what's going on? What we're looking at is this. The market's in a bullish crown, but we end up having an ascending triangle. From that ascending triangle, we end up seeing that this market has pushed up past resistance. And once it ends up going past resistance, it basically ends up falling back within this overall resistance area again at 41.35. While we're looking at that overall movement, because it is at resistance, now we can be able to play consolidation trading again. Now, the problem is that if we go to the daily, we can see that the daily is in the sell zone, and we can see that we have somewhat starting of a evening star right here. If the market remains to be inside of this 41.35 zone, I am interested in being able to sell it. But now I know that I have to be able to place my stop just above that overall swing high, which was right around the 41.70 area that we looked at again. So we're going to end up placing our stop right around 43.15 if we decide to do that. That's 186 pips if we decide to do that from this point. Kind of give you a sneak peek in what we end up doing inside of our masterclass and kind of getting an idea about what that would look like. If we go through and we take a look at oil, if we go through and we take a look at oil and see what the stop will end up being for this one. Let's see, how many pips did I say? I said 186, so I'm going to say 185. We go 185. Let's say hypothetically I got a $7,000 account, or you have a $5,000 account. You can be able to go with an entry lot size of 1.1 mini lots for this one. Now the question is, what is going to be the reward? Now, if we're looking at this overall, the reward from this overall position and looking at being able to sell long term would be back down to $37 a barrel. Now, this market ended up going to the deep 8-6 position, meaning that the new D extension would be at 34.73. So I would say the new D extension now is at 34.75 for us being able to get out. You want to take it all the way down there, expect for the market to be able to break that overall position. Then initially what you'll end up going after would end up being, we'll look at it from this point. We're talking about 654 pips. Now that is a very good risk to reward. I want to take a look at the 2 hour, 654 pips. That's a very good risk reward. I am kind of interested in being able to take a look at what we have. For with that, the stochastic is overbought. We have a counter trend line break if it remains to be the same, but it's not there yet. So I will keep that as it is. If we take a look at the 2 hour, where's the 2 hour? The 2 hour is in the buy zone. Okay, so my question to everyone else that I end up talking to all the time: if the market is in the buy zone on the 2 hour, should we be looking at taking this trade? The daily is in the sell zone, but the 2 hours in the buy zone. Should we be looking at taking this trade? Yes or no? We got a few people online, so I want to see if somebody gives me an answer. Okay, got a couple no's. Okay, and I agree that we should not be looking for a sale at this particular point in time. Not necessarily saying that we should not look for a sale a little bit later on today. But the thing is, what I would look for is this. I want the market to be able to break a counter trend line break bullish towards the upside, which means that it's going to break out of that resistance zone, and then I would want it to be able to fall again. If we could be able to get that to happen, then once we end up getting it in the buy zone off of this movement, it'll look like we'll create a head and shoulders pattern. If that does happen, then after that we can look at being able to sell. I'm sorry, that actually looks like a king's crown. If we get that, then after that I'll be interested in being able to sell it for that overall spot and being able to take it to the downside. But currently right now, even if the market kind of breaks down on this one, I know that I like the risk to reward. I just don't like that the market is in the 2 hour, because that means that as soon as we end up getting in, we're not necessarily getting the best value. So I will pay attention to it for probably in the next 2 hours, see what happens at 9 o'clock, see if the market ends up breaking up. If it does break above that overall position and it does give you a counter trend line break where you can catch the market at 42, right around that 42.20 area, then I think that this would be a good chance to be able to look to sell, especially if it keeps on breaking down. If it doesn't, then obviously we go from there. But right now, I'm going to say no to that. I like the risk to reward. I like the position. I mean, overall, we've been looking to be able to sell on this position, and it kind of made the same type of move before, but it broke a new higher high. It just basically ended up completing a de-extension from an upside move, and now that may be just a deep retracement to be able to go to the upside. Let's take a look at gold. Taking a look at gold, we go to the weekly. Currently, right now, the market is leaving from the buy zone. It should be it's starting to approach the sell zone. Currently, the market's at 26%. The market ended up breaking out last week, and currently, right now, the market is retracing and retesting right now. It's actually below that overall purple trend line. If it stays to be below that purple trend line before Friday, then that means that the market will consider to still be bearish. Well, it'll still be bearish, but overall, we'll still have more bullish undertones. Now, there's a support level that the market cannot be able to breach, and that's 1850. As long as the market does not breach 1850, then I'm okay saying that the market is still considered to be bullish. Now, if we're looking at this trading this overall, the question is, should we be looking at being able to get in on this right now? Right now, the market's at 45%, and we're getting very close to that market being right around our 20 to 10% right now, but we're currently not in that position as of yet. So if you're seeing the market stay below this 1850 to 1845 area, and let's say if Chairman Powell ends up speaking and the market ends up pushing up and ends up breaking past its overall purple zone, then I wouldn't chase the market. I allow the market to be able to fall, and then after that, be able to go up. Now, you start to see a sentiment change start to turn around, meaning that, let's say, if we see that this black line starts to curl up before hitting that buy zone, then after that, I will look at possibly being able to get in at that particular point. If you have an expert advisor and it's already making trades at this particular point, I would just let it go ahead and rock. But I wouldn't put my actual live money into that, at least not yet. I would just wait until the market ends up getting closer to the buy zone. Once it's in the buy zone, then after that, everything is all systems go. So I will wait on that at least for possibly another day, seeing what's actually happening with that. We still see that this market is having lower lows and lower highs, and I guarantee if we look at this on the 2 hour, we're starting to see more of a triangle, and that's exactly what we're seeing. We're seeing that this market is having this market has no momentum right now. The 2 hours in the sell zone, so the market should fall, and we're getting tighter inside of this overall Bollinger Band area. We're getting tighter in that overall Bollinger Band area. That means that a decision is coming, and from that decision, we're going to end up seeing movement. Now, whatever that decision is, to the bullish or to bullish or bearish, you have to be able to respect that, because that's the move that it's probably going to end up doing over the next 2 days. So currently right now, odds in is basically saying that it's going to be bearish. Once again, if it does not break below 1850, then we're okay. And we can still stay with our bullish undertone. The market ends up breaking out of this position and starts going below 1843, then you do need to look at possible selling opportunities instead of buying. But right now, I would not look at trading this one at all. Hopefully that makes sense. Now, we need to speed up a little bit because I'm going entirely too slow. Let's take a look at the NAS 100. I'm going to go through that one real quick, see if there's anything that we could be able to look at, and then after that, we get into the U.S.-based pairs, see if there's any opportunity. Obviously, we went through gold, went through oil, went through the Japanese yen. So we take a look at what's happening with the NAS 100. Currently, the market, to me, is still considered long-term bearish. This market has not broke above this overall A, but it basically ended up tapping that overall spot before actually pushing back down to the downside. Currently, the market is getting closer to the sell zone. With the market getting closer to the sell zone, we should see that the market will start to drop off, kind of like what happened a few weeks ago. But remember, every time that this market makes a huge push to the upside, then that market actually explodes to the upside. So I'm not necessarily worried about the market. Worried about the market not being in a no trade zone. I just know that once the market gets into the sell zone, then we'll start looking at potential sales overall. So trend line break, has it been broken to the upside? Currently right now, if we're looking at it, it's starting to be able to be that way, but it's not fully there yet. The market is still considered to be bullish overall. If we're looking at this position for its a take profit level, If the market breaks past 12,000, then it's going to go to 13,242. That will be good for all pairs when it comes down to this overall, when it comes down to being able to look at it. Currently, if we look at the 2 hour, what we ended up having was a ABCD swing that ended up happening. It ended up completing, and then since then, the market actually ended up breaking a new low. So basically what we're looking at from that position is, and we're actually looking at a bearish crown. We're looking at a bearish crown, essentially. What that means is we're actually looking at downside movement from, let's see, let me move this out the way just a little bit. We're looking at downside movement. We're looking at it from here all the way down to here. The market is at the 5-0 position. The market is just above the overall 50-day moving average, but if there's a counter trend line break bearish, then what we end up looking for is seeing that the market possibly could fall back down to these overall lows that it fell down before, which was at 10,951. And if that does happen, then the market would still be considered to be bearish, and also it end up making more of a head and shoulders pattern once again for that overall movement. So right now, I'm going to stay away from this pair. I'm not going to look at being able to do anything with it. I know that I was saying that I was interested in being able to sell. The market has left the sell zone, has not had that much movement yet. I do believe that the market does fall. It's probably going to fall to point of control, which is about 11,656, which is about 300 points away. But right now, I don't think that's the best position to be able to take, at least right now. Let's go ahead and take a look at the let's go ahead and take a look at some of the U.S.-based pairs. I want to start off with the pound U.S. because remember, the pound is probably the weakest pair right now. The pound has been struggling to get past 1.33. And currently what we could be able to see right now is that the market is in the sell zone. The market has been moving. It moved 124 pips yesterday because of Brexit news, and moved 90 pips today for its overall movement. So we're talking about another 200-something pips. This is where I wish I would have had on my I wish I would have had my quanti trend on. A few people out there know what I'm talking about when it comes down to that. Yeah, I wish I would have had that one on. That would have been a quick cash out. But if we're looking at this market overall, this market is expected to be bullish for its overall pair. It's expected to be able to go up to 138. And if Brexit news end up being good, then we should see that market should go up. But overall, long term, I expect that the market is going to end up being bullish. So with it being in a sell zone, that's more of a retracement to me overall. And the reason why it's a retracement to me, and I can see it right now, this subfield that just happened at this particular point has completed a de-extension. Market went all the way down and pushed up to the 8.6. From that 8.6 position, it started to retrace. Currently, right now, we're just in a retracement area. So that makes sense on why the market is actually moving to the downside. It's only moving to the downside because the de-extension got completed on the pound going to the upside already. So we don't even have a retracement area to even look at being able to get into. So with that being said, pounds, I'm going to end up taking a look at it and canceling it. I'm not looking at being able to trade that. U.S. Swiss franc. We talked about being able to get in on this pair when this market was at 90. We did not pull the trigger on that trade on Monday, and I wish we would have, because we would have been up 141 pips at this particular point. Now, what are we waiting for overall? We can look and see on the daily that this market broke the counter trend line to the upside, bounced up. Currently, we're looking at a little bit of retracement. We're in the no trade zone on the daily. But we go to the 2 hour, we can see that we're basically in the buy zone on this overall pair. I'll be interested in being able to buy on this pair, even if it's just a 2 hour buy, and being able to see how far it can be able to go, as long as the de-extension has not been completed. Right now, if we're looking at this position, the market ended up going and only retracing up to the 236, which means that it was at a short position. Because it's at a short position, it found resistance at the 127, which is the 80-20 rule. For the people that's inside of my master class, what happened from here is the market basically ended up retracing. Currently, it's in the buy zone, but we do not have a counter trend line break bullish. Once we end up looking at a counter trend line break bullish, and after that, I will look at being able to buy to the upside, at least from there. If you want to be a little bit aggressive, quite frankly, you could get in right now. I'm going to be a little bit more conservative on this one. If the market ends up breaking above 90.60, then I will look at being able to get in for this overall position. But right now, if you're looking at the market currently right now, looking at the price, Um, we're talking about 10 pips away. So if you're interested in being able to buy, um, and you can justify being able to get in on this one because this is a R3 considered trade, your stop would end up being just below the overall A, which would be about 44 pips. So you could say 50 pips to go after 92. Now, not necessarily a 1 to 2, but it is a overall reward that you could be able to look at for us being able to get in. I'll place my stop at 90.10, go after the reward at 92.44. Yeah, 92.44. So if you're interested in being able to take that position, here goes your stop. Stop would be 90.10. Reward will end up being 92.44. Well, let's go 92.43. And your entry will end up being based off of the counter trend line break. You got that? You want to take it? Then go ahead and do that. Okay, there you go. We have time for, I think we can do 2 more. So what's been happening with the yen? We have been looking at being able to sell on the yen. We want the market to be able to go down. This market ended up going to this market ended up going to 105.60, and then after that, subsequently rejecting off of this long-term movement towards the downside. But right now, the 2 hours in the buy zone. So overall, selling right now is not necessarily the best thing to be able to do already. From a weekly perspective, this market has been flowing down to the downside and is expected to be able to go all the way down to 99.20 long term. The short term position will be 101.10 for that movement to the downside. Currently, right now, we have a bullish engulfing candlestick that is actually working right now as we look at it, but it has rejected off of this long term trend line. So if the long term trend line repeats and stays to be a overall rejection area, then we should see the market fall below 105 again. If it falls below 105, it's gonna end up crashing down to 104 very easily. Like I said before, if it breaks below 104 and remains to be below 104, then we should see that the market will continue to try to go to 101. Last week, we ended up getting that big push, but it didn't follow through. So that's what we're looking for overall. Daily, daily's in the no trade zone, but we see that it has rejected off of 105.50 3 times. Currently, right now, we see that the market is pushing up to the sell zone, so I'll wait before actually getting into this overall pair. But that's where we are for the U.S. yen. We got time for one more. Let's take a look at the Euro United States dollar. If we look at the Euro United States dollar, the market is considered to be bullish long term. What's happening on the daily is the market is close to the sell zone and it's starting to curl over, which means that we're starting to get a little bit of sentiment change. Remember, we took this buy last week based off of the counter trend line break bullish going up to 1.19. That market ended up fulfilling. So for the people that end up making money on that, congratulations. Since then, the market has broken that counter trend line to the downside, meaning that the market could fall all the way back down to 1.1650 before actually starting to push back up. So that means that if we look at overall, this market would be considered to be bearish. Currently, the market is in a consolidation zone. So remember the 2 rules in consolidation is that you buy support and you sell at resistance. Everything else doesn't matter. So right now, we're in a position where everything else does not matter, being able to get into it. So I'm done with that one. Let's take a look at the Austrian dollar, United States dollar as our last pair of today. Austrian dollar, United States dollar market is in the sell zone, kind of like what's happening with the pound. Currently, right now, we can see that the long term that this market is considered to be bullish. We also see that this market has went all the way up. Let's go back on that one. We have seen that this market has broken out of this overall resistance zone, and then after that had a little bit of struggles of being able to break the A. Because they had a little bit of struggles being able to break the A, that is still intact. That's 73.44. I will place my stop at 73.50 if you're looking at being able to get in on this one to the downside. Currently, right now, the market is from the downside is about 96 pips. Let's take a look at that and see what that looks like for the overall entry area. 93 pips. Oh, let's see. Yeah, 96 pips. Currently, right now, we're looking at this overall market and going back to it. We see that this market is on the weekly. On the weekly, the market is considered to be still considered to be bullish at this particular point. The market ended up breaking out of this overall zone. We talked about this yesterday, how it ended up having a little bit of momentum, but the momentum was actually going to the downside for it being able to reject. But it was only rejecting because the market ended up breaking out of this overall resistance area. So as long as the market does not break below 72.33, then the market would still be considered to be bullish. The daily A is at 73.13. The daily upfield movement is going to end up going to 80 if that does happen. So overall, I would say that the market is still considered to be bullish. The market is still considered to be bullish on a weekly, even though the daily's in the sell zone and you're looking at being able to potentially sell. There's no trade alignment, and if there's no trade alignment, then there's really no trade to be able to take at this particular point. If you're trying to do it, by rule. Let's see. Take profit if the market does drop, will end up being at 69.50. 69.50 at this particular point would be all the way down here, which would be about 311 pips to the downside. Now, what we've noticed is that when this market does basically end up having falls, it basically has fell down very strong, and then after that grind back up, and then after that fell down slowly, and then push right back up. We see that the U.S. dollar index is basically in the buy zone, which gives that a good thing to be able to say that we should be looking at buying on the dollar. I mean, we should be looking at taking any type of retracement trade that we can be able to get. The Australian dollar is one of those pairs that I expected to be weak long term, or at least for right now. We don't have a counter trend line break. Okay, well, that makes it a little bit easier to be able to answer this question. Yeah, we don't have a counter trend line break, but the market is in the sell zone. Let's see. If I'm doing this, I'll be going against my rules. The market is broken out of the trend line, went up here, basically done hovered up at this position. Currently, right now, we have strong support. I don't need a triangle. We have strong support right here. I don't know if everybody can be able to see that, but that strong support has been from that 72.50 area to where we are right now. If the market breaks below 72.33, rejects, and then after that breaks below again, then I'll be interested in being able to sell. That wouldn't be a break the bank type of sale. That would be somewhat of a low percentage. But if it does something like this and then falls down, then I'll be interested in being able to do that because it broke support, and then it will start to move down. But right here, the market is in the no trade zone, not even in the sell zone to look at being able to sell, and it's holding support right here. I think this is fool's gold for someone that's actually trying to sell this because of the daily, unless the market ends up having a big push to be able to make it move. So right now, what I'm going to end up doing, I'm actually going to pass on that pair as well. So right now, what do we have? We have no trading pairs to be able to take a look at right now at this particular position. That doesn't necessarily mean that we're not going to have any trades to be able to get into a little bit later on. Just means that right now we just don't have any trades that I'm interested in being able to put my money into and feel very confident in the overall move at this particular point. Hopefully it ends up making sense, and hopefully you end up understanding why I decided not to be able to take trades, because once again, you want to be able to take trades that end up giving you the highest probability to be able to get into. And when I end up taking trades, I want to be able to get in with a trade that has a 80% or more type of trade to be able to get into. The only trade that I'm interested in right now, in particular, is oil. And if oil ends up rising up a little bit later on today at $42 a barrel, and then breaks down again, kind of like what's happening with the New Zealand dollar, and it has U.S. strength behind it, then yes, I would look at being able to take that sale. But for right now it's in a position to where the market was considered to be bullish. So I would kind of stay away from it at this moment in time. Now, if you like what we end up doing, please make sure that you like the Carter Cow trading business page. Please make sure that you end up subscribing to Trade with Travis on YouTube. We do this each and every morning from 7 a.m. to 7:30. Please make sure that you end up hopping into our boot camp on November 23rd to November 27th. We still have tickets available to be able to do that, to reserve your seat. You can go to bit.ly/believe in yourself Forex to be able to get that done and to be able to sign in. If you have your automated traders or anything else like that, let them ride. Let those go ahead and trade and do everything else that they're doing. Like I said, I ended up making $200 in my sleep, and quite frankly, I didn't do much of anything aside from get some good sleep and then wake up and come talk to y'all about being able to trade. And ultimately, the biggest goal is to be fully automated for me personally over the course before we end up getting to 2021. But once again, take advantage of the overall opportunity that we have. And I forgot to tell you, I've been growing my hair, and everyone's been seeing my progress. If you've been watching my videos, this has been 5 months yesterday. I know the first time that you'll end up seeing, I think everything was up here, and it really wasn't that much. But it's starting to grow. It's starting to get there a little bit. I'm starting to get noticed a little bit when it comes down to the lock community. Not really, but 5 months. We're getting close. My birthday's coming up in 10 days. Or coming up in 9 days now. And on the 21st, you're gonna end up seeing more barrel rolls. We're gonna try that out one time and see what that looks like. But everyone, y'all have a good one. Always good talking to each and every one of y'all. For the people that end up liking this video, for the people that end up talking to me a little bit later, obviously we can get up. But plan your trade your plan. Everyone, y'all have a good one.